Guys, the repo man might be coming for you. In today's video, I'm going to explain why that is. A lot of people are thinking that a recession, a auto recession is on the way, along with the real estate market, along with the stocks, crypto, everything, an auto recession, guys. In today's video, we're actually going to talk about it, and I'm going to let you know whether you might be on the repo list in 2022. Guys, stay tuned. Welcome back to the channel, guys. If you're new to the channel, I'm Credit Coach Q, and I create the first cloud-based software that allows you to put your credit repair experience into your own hands. If you're new to the channel, I'm super excited because I have a banger. If you're new to the channel, guys, please like and subscribe to the channel. It allows us to reach a wider audience and allow YouTube to push this content within the algorithm and allows us to leave these lights on. Guys, thank you for liking and subscribing to the channel. Now, let's talk directly about the meat and potatoes of this video. We're going to talk about the auto recession. Now, for those that don't know, I used to be an auto salesman, and I used to be in the industry for quite some time, probably 3 or 4 years. So I learned a lot, and I learned the ins and outs of the car industry, so to speak. Now, the car industry moved pretty fast, but for the most part, it's definitely stayed the same. And right now, the auto industry is not doing so well. There has been record repos on the bank list, and the whole industry is falling under. And I want to explain in this video whether you fit the criteria of a repossession in 2022, but most importantly, I want to talk about whether this is going to move in a positive trajectory anytime soon, guys. So let's dive straight into the meat and potatoes of the video. So if you have anything derogatory in your credit report, I mean anything negative, charge-offs, late payments, bankruptcies, medical bills, guys, you name it, please go over to mycreditapproved.com. It's the website and the software that I was telling you about that allows you to put the full experience to your own hands. Guys, people are removing thousands of dollars worth of debt by themselves. They are no longer using credit repair companies. They are putting this information and this experience into their own hands and appreciating on a deeper level. Guys, please go to mycreditapproved.com, check out the software, and start removing these items, guys, if you have anything derogatory on your credit report. First, the car industry right now is basically moving from the momentum of the PPP loan. Now, the PPP loans, or when the country as a whole flooded the economy with so much capital that a lot of households had more extra income than usual. Now, with that extra income being stated on a month-to-month basis, that allowed bank statements to be more positive, so to speak. So it allowed your bank statements to be have an influx of capital or reserves during those time periods. Now, with that being said, now, as you know, when you go to a car dealership, you do an application, and along with the application, they ask for your bank statements, right? Now, if your bank statements is giving you a positive or extra $2,000, $3,000, $4,000 per month because of any circumstance, there can be unemployment, there can be the PPP loan, there can be SBA, there can be so many different variables that they flooded the economy with during that time. And if your income reflected that, which most households did, then that also put you in a better bracket qualification for different vehicles, right? So it's a lot of people that got Benzes, they got BMWs, they got so many different luxury vehicles or new vehicles at the time, with not really having the longevity of income to sustain those vehicles, right? So what did that leave us right now in 2022? With the economy being in topsy-turvy, is doing what it's doing in regards of not being positive right now, that basically leave us with the bill, right? The bill still needs to be paid in regards to these vehicles, and because of that, that allows a lot of the consumers that really, like I said, didn't have the longevity of income. And when I mean with longevity, I mean that you don't have the income. If your income was up $3,000, $4,000 just because you was getting extra money on the side for unemployment or anything like that, then when the unemployment ran out, that income is is not going to be still consistent when it comes to your day-to-day life. But when you add contracts like an auto loan, like a renter's contract, or anything like that on with that lifestyle, assuming that it's going to be consistent, when the lifestyle falls under, you are left with the bill. And a lot of consumers are really in this stagnant position right now. Like I said, the banks are stating that they are getting record repossessions on a month-to-month basis, and they don't think that the repossessions that they are getting with the influx is not going to dwindle anytime soon, because like I said, they have so many vehicles out there that these car dealerships and these banks pre-approve or approve without doing the proper vetting on the longevity of the income, or without considering the influx of capital that the government was flooding the consumers with. So with that being said, where did that leave us now? The banks are really starting being more strict when it comes to these contracts and when it comes to these loans, guys. The qualifications is going to be a little different. They are going to try to make the vetting process a lot more stringent. Now, with the economy being in the toilet right now, a lot of consumers are not buying vehicles, and a lot of banks are repossessing vehicles. So what did that leave the vehicle market? It definitely leaves the vehicle market with an influx and a overflooded and hyper inventory. So with that being said, that puts a lot of people in a prime position if they can hold off to buying a vehicle, because when the inventory gets to a certain point, a lot of vehicles is going to go on sale, because they are going to have to get those vehicles off the books to recoup any type of investment that they have already invested into the vehicles initially. Guys, if you found any of this information helpful, please, like I said, like and subscribe to the channel. It allows us to leave these lights on and allows YouTube to push us within the algorithm. But yeah, leave a comment and let me know how you feel about the current repossession, whether it's going to get better in the future, if it's going to get worse, or how you're planning on capitalizing. Are you planning on leaving or staying with the vehicle that you have? Are you planning on buying now because it's going to get worse, or are you planning on saving that potential investment for a later time to possibly get a better ROI for any type of investment into any vehicle going forward? Guys, so next time, like I said, leave us a comment and like and subscribe to the channel. And until next time, take care of your credit and take care of yourself. Credit Coach Q out.